one of Britain's richest men quietly left the UK. The billionaire founder of Revolut, Nicholas Storonsky, changed his tax residence. There was no press conference, no political rant, no drama. He just left. And when people like that move, you should pay attention, because this isn't about Revolut and it's not about one billionaire. It's about a pattern I'm seeing across business owners, investors and asset holders. People with companies, property, 7-figure balance sheets. They're not leaving because they're greedy. They're leaving because the UK has become so oppressive to the people who build and own assets. And I don't mean oppression in the dramatic sense, I mean economic oppression, where the rules increasingly punish productivity, capital and success. So let's actually break this down. What changed in the UK, why confidence has collapsed, and why wealth always moves before the headlines. Let's talk about why people like this are leaving, and no, it's not because they don't want to pay tax, it's because the UK has fundamentally changed how it treats people who build, invest and take risk. We hear politicians say things like everyone has to pay their fair share. That phrase has been repeated again and again by Rachel Reeves, and on the surface it sounds reasonable. But here's the problem. This isn't a fair share anymore. This is a punitive share. It's a system where the more value you create, the more you're targeted. You take the risk, you build the business, you work 60, 70, 80 hours a week for decades, you reinvest instead of spending frivolously, you delay gratification, and then right at the point where it all comes together, bang! The rules change. Higher taxes, frozen thresholds, pulling you into top rates by stealth. Dividend taxes rising, capital increasingly treated as something suspicious, and at the same time the state keeps expanding what it promises without fixing how it delivers. So here's what really breaks people. You're told to contribute more, while public services visibly decline. The NHS doesn't work, so you pay privately. Crime and disorder increases, so you pay to live in safer areas. Infrastructure fails, so you self-fund solutions. So you're paying record tax and then paying again just to function. That's not fairness, that's extraction without value. At some point, people don't get angry, they just get tired. Tired of being told success is something to apologise for. Tired of being treated as an endlessly squeezable resource. Tired of policy that punishes outcomes instead of encouraging them. And when people with options reach that point, they leave. They're leaving for predictability, for systems where tax rules are clear. Asset ownership isn't treated as immoral. Success isn't constantly reframed as a problem. The deal between citizen and state still makes sense. That's why people are choosing places like Dubai. Zero personal income tax, low flat rate, corporate tax, clear enforcement, clear rules. You know where you stand. And it's not just Dubai. We have clients relocating to the Isle of Man, to Paraguay, to Uruguay, to Eastern Europe, not because these places are perfect, but because the rules are stable and proportionate. And here's the part no one wants to talk about since the autumn budget, the taxes that didn't actually go through, especially exit tax style measures, because once you've floated an idea publicly, you don't forget it, you test it, you normalise it. That's why there was all that chaos before the budget. They were testing reaction. They were conditioning us to prepare for more taxes. And I'm not saying exit tax exists today, but in my opinion, it's coming. That's why it was floated around so much before the budget. So it isn't a case of if wealth plans for protection, it's when. And the people who get hurt aren't the ones who planned early, they're the ones who assumed the rules would stay the same. So the question isn't why are people leaving, it's why would anyone with assets and options stay. So if the UK feels oppressive for business owners, asset holders, high net worth, where are people actually going? There are 3 real tangible options being picked by our business owners and investors and founders that aren't fantasies. Dubai is the destination everyone mentions first, and for good reason. There's 0% personal income tax, you don't pay tax on your earnings at all. 9% corporation tax, and it only applies at a certain threshold. No tax on dividends or capital gains for individuals in most cases. That combination is night and day compared to the UK, where a high earner can face a top personal tax rate of around 45%, and once you're over 100 grand, stealth tax comes into play. Dubai also sells something else, certainty. People talk about it not just as a low tax place, but somewhere whose rules don't shift every year and whose legal system supports investment and mobility. Number 2 is Bulgaria, a completely different model. Still in the EU, still cosmopolitan, but with tax rates that look almost unreal next to the UK. Flat 10% personal tax, one of the lowest in the entire European Union. 10% corporation tax, again, extremely lean. 10% capital gains. Even gains from investments often fall under this low flat rate. Compare that to countries where the top rate of tax creeps towards 50% or more. Bulgaria doesn't just lower the burden, it simplifies it. Some people choose Bulgaria as a European base with low tax, low cost of living and market access to the EU. It's strategic. Number 3 is Uruguay. Uruguay is a different flavour again, especially attractive if you're thinking about business deployment and lifestyle. Uruguayan corporate tax generally sits around 25%, but that only applies to Uruguay-sourced income. Uruguay uses a territorial tax system, meaning foreign-sourced income is typically exempt. As an expat, there's a long window where foreign income isn't taxed, and it's often up to 10 to 11 years. After that, there are options to pay a reduced rate on certain types of passive income. That means you can relocate and legally keep global earnings outside the local tax net while establishing residency and lifestyle there. A powerful combination if you're mobile and internationally oriented. To put this in stark relief, in the UK, the top marginal tax rates can reach 45% or more on personal income. In Bulgaria, successful earners pay 10% flat on personal and corporate income. In Dubai, personal income is zero and corporate tax is low and predictable. In Uruguay, foreign income can be not taxed at all for years under the territorial system. So when business owners say the UK feels hostile, they're not talking about emotion, they're comparing actual retained net wealth after all tax and friction. And just to be clear, this isn't about finding a tax haven with no rules. These are fully sovereign, legitimate jurisdictions with law enforcement, banking systems, residency requirements, lifestyle options. They aren't escapes, they're strategic decisions based on where the tax to value equation makes sense. So what happens to your business if you leave? This is where people get confused. They hear move abroad and think it means blowing everything up. It doesn't. Step 1, you don't move the business, you move the person. In most cases, the UK company stays exactly where it is. Same company, same bank, same contract, same clients. What changes is you. You change your personal tax residence. If you're no longer UK tax resident, the UK stops taxing you on worldwide personal income. That's a huge shift and it's perfectly legal when it's done properly. Step 2, extraction changes completely. This is the part most people miss. When you're UK resident, extracting money is painful. Salary, dividends, NI, income tax, layer on layer on layer. But once you're resident somewhere like UAE, Bulgaria, or Uruguay, that personal tax layer often disappears or drops dramatically. So the same dividend suddenly lands very differently. Same company profit, completely different outcome. And this is where restructuring comes in, because once you're no longer UK resident, the order of the operations matter. For example, you might insert a holding company, you might separate trading from assets, you might retain profits instead of extracting, you might deploy capital inside structures instead of personally. This isn't about saving tax, it's about control. Step 4, avoiding the big mistake. The biggest mistake people make is restructuring after they leave. That's backwards. Most restructuring is done before a move, while you still have full clarity, access and stability. Why? Because once you've moved, you want simplicity, you want predictable flows. You don't want to be firefighting structural issues from another country. This is why high net worth individuals don't wake up one day and leave. They plan, they restructure, they create optionality, and then they move. Relocation isn't a tax trick. It's the final step in a strategy that was built years earlier. If you don't do the groundwork first, you limit your choices later. And this is exactly why people who plan early stay calm, and people who wait for policy changes panic. And this is exactly what we do. Our onboarding starts differently. The first thing we ask isn't about last year's numbers. We ask about the next 5, 10, even 20 years? Do you see yourself staying in the UK long term or relocating at some point? Because that one decision determines everything. If you're staying UK based, that affects how we structure the business, how assets are held, whether we need wills, trusts, succession planning. And if global mobility is on the table, then the structure is built very differently for flexibility, for clean exits, for cross-border efficiency, for not having to unwind everything later at a cost. We don't give reactive advice, it's architectural. And because this is bigger than one video, I'm building a private community to map this out properly, step by step, from foundations to extraction, to deployment, to structuring, to trusts, to global mobility. If you want access, join the waitlist. The link's in the description. No hype, no panic, just long-term decisions made early while you still have leverage. I'm Sarah from Tax for Pros, building wealth, not just businesses.